Well, we got the first day of the Santa rally. What do we have to look forward to? Let's talk about that in this video. I am Dr. Stock, Doctor of Education, and if you go to toast on New Year's and you find out somebody gave you juice instead of bubbly, you might be feeling the champagne. We're going to take a look at the indices to see what's going on the technicals for them, and I also have a few stocks that I'd like to cover in this one, and we'll also give an update on crypto. We got Sofi, Nvidia, Tesla, and also I'm going to toss in Mara. I think it's very interesting and relevant that we pay attention to that, and then also Bitcoin, Ethereum, and Avalanche as I've been tracking them. And I will also tell you in this video about my Patreon where you can see my buys and sells through the Discord that's over there, my options course, and also the free stocks from Moomoo. In the meantime, I want to get right into the charts on this one. So we're going to kick things off by looking at the weekly chart for SPY, and then we're going to start drilling down into the time frames that are there. So let's put this up. Look at all those yellow bands. This is near-term support and resistance that we see on that. You can see for SPY that even though we still haven't hit, we're like 0.7% away from the all-time high. 0.7% the all-time high for SPX, which is the S&P index itself. We are at all-time highs in SPY as we look at this. And if you look really closely, go ahead and squint at your screen. Let me put that away. Right there, you can see a few little markings come up, and we're actually going to take a look at those on the weekly chart. We're in the overbought territory, but as I mentioned before, you can see that we can hang out there for a little while. Doesn't necessarily mean that we'll come crashing back down. Popping down to the dailies, you can see a little bit more of what I have drawn here for you, and so we can see what to pay more attention to. We were in the extremely overbought territory, settled a little bit, and now we're rising back up. Take a look at the trading volumes. For SPY, not horrible, not quite as low as we had on a partial trading day for Black Friday, but that week that we had, that Thanksgiving week, was that time of lower trading volumes, and so we could possibly see that coming up throughout the Santa Rally week as we look at it. Let's go down to the hourly chart, and we'll start talking about near term, what we see on this thing. So here's what we got right now. So this right here, we could either see as an ascending triangle, which I think is a good view of it, and then we also have support at about 475. Should we come down through the bottom of this trend line today, 475 is what we want to hold in order to continue in a bullish direction that we have here. So if you see this more as an ascending triangle, because I think honestly, ascending triangle is probably the better of the two. That's continuation pattern. That could send us up to 480. So that could be another full percent by the end of the week. I would say that we could possibly see that happen, especially in light of lower trading volumes where those prices might drift up higher. And I'll also show you the economic reports on this to kind of give more significance as to why I think that might happen. And then next week is a bigger week because we got a lot of employment data coming out. We'll take a look at that as well. So could we possibly keep drifting up? We got to watch this trend line that we have right here, that we could possibly break out above that. We do have a secondary trend line that I'll put on the chart for you so that you can see that as well. And I would say that it's shaping up right around these peaks that we have here, and that is at 475.85, so almost 476. So if we break up above 476 and we stay above there, I think that we're golden up to 480, but we're going to have to watch for that and see if that Santa rally does continue for us this week. We had a decent start yesterday. Over into the Qs, looking at the daily chart that I have here for you, you can see a little bit more on the technicals, and you can even see I have a double trend line that I have here along with this formation as well. Let's go down to the hourly to see what's going on for QQQ. So for this one, let me keep on zooming out so we can see a little bit more. You can see the last time we broke down through the bottom of the trend line for this one, and if I just move that just real quick, that's the wrong one. Let me move this one. There we go. The last time that we broke this trend line, we actually had a pretty significant drop from there, and we do want to be careful that for this one, that we're not necessarily seeing that same thing. Let me put that back. There we go. So if we break the bottom trend line, we want to hold at 410 for QQQ. If not, we could see possibly 408 pop out of that, possibly 406, and I think that we could possibly retrace as far as 405. That's if we break support on this one, but in light of lower trading volumes and really no significant expected news coming from that, I think it's possible that we don't see a lot of downward price action and that we continue to stay bullish throughout the rest of the week. So we're going to have to see if that does in fact hold out. I'm going to be watching the technicals throughout the day to see how that plays out. Let's go to some stocks. So Sofi, as we look at this one, if we were to draw some trend lines on Sofi's hourly chart that we have here, you could see the rising prices this way, and honestly, $10 is that pretty hard resist that we have on here. And I said in my previous videos that we're going to find hard resist at 10 bucks. We actually peekabooed up above it a few days ago. And then yesterday, I think that our high price was $9.99. So we are actually 1 penny away from the $10 mark. This is a continuation pattern that we could possibly pop up above that. And we could see anything from $10.50 to $11.50 popping off of that for SoFi. So for SoFi, we could absolutely see further bullishness from here if we can break $10. If we can't break $10, then it's back down to $9.50 and even $9. We're going to have to watch for that. But I do think that the price is going to remain somewhat elevated for SoFi compared to what it has been recently up until we get those earnings and we hear about Q4 profitability. So should they be profitable? I think that's going to be good. I think either way, going short on earnings for SoFi, depending on where the price action's at. If the price action's already elevated going into earnings, I could see put options being appropriate for that because I think that expecting the profitability, I don't think it's going to be stellar profitability, but it'll be profitable, which means that we have a company that's finally starting to return somewhat to its investors. So we'll be watching for that one. That's going to be huge for them, but I think that it could be a run-up in anticipation to those prices. So that leads to further bullishness for SoFi leading up to the earnings date. And should they miss profitability, then instead of just somewhat of a drop, I think that that would lead to a major drop, especially if guidance comes out soft for the next year. So we want to keep our eyes on that for SoFi. Hopefully they hit profitability. So far they've delivered on their earnings and we want to see them continue to deliver on their earnings. Moving over from there to Nvidia, we're starting to see the breakout of the upper trend line. And I will say that we could be seeing that cup and handle pattern play out for this. This could be the thing that sets us up over $500 solidly per share and allows us to actually stay there for a while rather than hang out below that 500. The one weakness that I would say for Nvidia for watching it continue higher from here is the fact that the markets are already so high and Nvidia is somewhat in the market's hands. That is most definitely pressure that we have for Nvidia stock filling out this cup and handle technical pattern that we have playing out, which is a bullish one. We're starting to see that bullish behavior. We do need to see that push up to 500, and then we need to break that resistance at 500. Should we do that, and should the markets hold out, I think 525 to 535 is where we could see that price go. So cup and handle pattern, we're starting to get it. We want to see if we continue to get it. We got to monitor these prices very carefully and also watch the overall market bias because, like I said, Nvidia is in the market's hands, and that's the one weakness that we have for that. So now the big one. Go ahead and we'll put up another drum roll. I'll try and be gentle here because you are listening to this, and I don't want that drum roll to be too loud in your ears. The big one here is Tesla. Look at this. I actually have the technicals hidden on this one, but here's the daily chart that we're looking at for Tesla. We're actually right in bullish territory, not overbought, not down near 50. And if we actually go out to the weekly chart on this, we actually have a really good looking RSI where we're starting to see a build in the momentum up above the 50. So we're actually sitting really nice from a momentum standpoint for Tesla, but we are getting into a critical moment for this. So let's put up some of the technicals and see what exactly is going on. There we go. Apparently my daughter's not too happy about the technicals for Tesla. Sorry, baby. She's about 6 months old right now, just past the 6-month mark. And we couldn't be happier about that. So let me zoom in on this so we can start seeing. So a few things. First of all, the Fibonacci that I have on here, the 50% line. So 50% top to bottom on this thing is like just shy of 260 exactly. Where's our price action right now? The high price yesterday, 257.97. So 258 is about where we're finding that line in the sand. We also have this long-term historic resistance trend line coming down through here. So breaking up above that, which is like, I'll zoom in. We'll see more of that. And then we also have this trend line here, which we broke down below. And then we've most recently had that as resistance for us as well. We have a major point of confluence on our hands that makes that this week could be a big catalyst for the price in either direction for Tesla. So I just wanted to put that up there. Let's go down to the daily chart on this, and then we're going to go down to the hourly on this as well. So when we look at the daily chart for Tesla, where are we at right now? Well, you can see even more that point of confluence that we're at, that we're just getting rejected off that trend line that we have from that long-term history going all the way back to the end of 2021 when they peaked with their prices and the sell-off that we had since. And we actually peekabooed up over it when we went up close to $300 per share. So should we be able to cross up over this, that would be excellent for us. It means that something like 268 being in the cards actually opens up the gateways on this for even higher prices from there. Now, if we do get rejected off of that, that could send us back down. The 50 EMA is at 241. The 50 SMA for this one is at 232. So either one of those we could possibly see going back down if we get rejected from that. And then let's go down to the hourly to see the more recent price action that we have on this one. And you can see from this, we have this trend line that we're currently operating on, that should we break down below that, that gives us room to go back down to 250 and then 245. And then like I said, 242 and then all the way down to 232. So we want to keep our eyeballs on that one. And then also for the 200 hour that we have on here, the 200 hour on this one comes out to 248, 249-ish, right in that ballpark. And then look at straight across the top there. That line is almost at 258, and we keep getting rejected off of it. This could be that continuation pattern that allows us to pop up through the top of this one. And then we have the 50% fib at 259. There's the line at 260, which I said is one of our targets. We almost got there and got rejected before, and I think that we're getting ripe for that time. It's possible that Tesla finally breaks through that resistance that we've seen historically, like I said, going all the way back through the end of 2021 and then throughout 2022. And then we saw it again early in 2023. And so now we're pushing up on that more than ever. And we'll see if we finally punch up through that and actually get some real upward price actions, really bullish movement for Tesla. All right, so I'm going to take just a quick break from here just to tell you, if you guys want to see how I'm playing this market, you can check it out over at the Patreon. That link is down in the description. Over at the Discord is where I post my buys and sells. You can talk with me and my other community members throughout the trading day. And then I also have my options. Course options are where I usually make most of my profits that I can use to dump into my long-term investments. And then I use Moomoo in order to place a lot of those options plays, whether I go long or short on the options and whether I take calls or puts on those options. It really all depends, but I do that through Moomoo. 15 free stocks with qualified deposit, 5.1% on uninvested cash. All right, so real quick before we get back into it, I just want to tell you about the catalyst this week. We have some different manufacturing data, some stuff about treasury auctions and bond auctions that we have, and nothing really that's going to be super huge for the markets. And if it was seen as a major catalyst, oftentimes you would see it highlighted in red. And you'll notice for this week, there's nothing really highlighted in red for this one. Now, if we change this from this week and go to next week, there we go. So we have Redbook, more manufacturing data, but then when you look, here we go, ISM manufacturing, JOLTS, job openings that we have. We want to see if that number continues to decline or if it's one that's going to continue to increase for us. We're going to have to look and see. The FOMC minutes coming out at 2 p.m. could be a decent catalyst for us. I think especially leading up to it, maybe the stocks will press down, maybe because they were so dovish, we actually have a rise and then a settling. We'll have to see, but that still could be a catalyst for us. And as we move, we have challenger job cuts, even though not highlighted red, still pretty important for us. ADP employment change is also going to be important. Initial jobless claims. There's a lot of stuff coming up next week. Non-farm payrolls is going to be huge for us, and we want to see if we're still under that soft landing scenario. And if we are still under the soft landing scenario, if that's still the sentiment that's out there, then the markets are green lighted to continue higher. If we start to see jobless numbers increase, we start to see the job openings decline, and we start to see the unemployment numbers also change for us, which, by the way, unemployment rate is also at 8:30 a.m. on Friday next week. We want to be watching that one because as that starts to tick up, it could start to tick up rapidly from there because it is not a linear progression there. It's more of an exponential one. So that is most definitely something that you want to watch for those changes. I think employment is going to be absolutely huge because labor market has to stay tight, and the GDP numbers have to stay good, and the inflation numbers have to continue downward. Those three things, as long as they continue happening, we go status quo in the markets, in the economy, continue to do, or they at least the sentiment on the economy and the sentiment on the markets, I should say, continues to do well, and then we see further bullishness in the markets. At least that's how I see it possibly playing out. If we start to see inflation tick back up, which I don't expect it to, because December is typically one of those low months, so we get the inflation numbers for December in the middle of January, I think they're going to be pretty positive for us. And then also jobs, we'll see if we start to get those changes in the jobs. If they start to, joblessness numbers go up, unemployment number goes up, that is something that could absolutely be a negative catalyst for the markets. And then GDP numbers are also going to be absolutely enormous. Those are the next major catalysts that I see for the market. So let's go from there and step back into crypto. So here, when we look at BTC, you can see the technicals that we're operating under. That so far we're narrowing down on this, and we need to see, do we pop out of the top trend line and then get stopped out at this right here, about 44.4 per BTC, or is it one that we catch support down here at 42.3? Should we break out the bottom of this trend line? We could honestly see down to about $40,000 per BTC, and down below that we get support at about 38,000. So watch the trend lines. If we make it through the top, if we pop the 44.4, we have room to 45, and then up above that, according to the Fibonacci's, 48.6. So we're going to be watching this formation that we have for BTC to see where exactly we pop out of this thing. Moving over to ETH, you can see a similar formation for this one. Up above, we have $2,300 per ETH. Up above, that's 2,500. Should we pop this top trend line? Should we pop out of the bottom of this trend line right here? We get caught at support at 2,150, and then down below that is $2,000 per ETH. So again, watch the trend lines, see which one we pop out of. Going over to Avalanche, let's actually reset the chart view on this one. There we go. So $52 is this yellow line up here, and then we'll go in more closely to see what's going on right now. You can see on a weekly chart that we're extremely overbought with a little bit of declining momentum. Drilling down to the daily charts as we look at this one, you can see that declining momentum as the prices were rising. It's a bit of bearish divergence. I said we could possibly see the prices drop, and they did. And now I did adjust the trend line on this one. That I actually had this up a little bit higher and a little bit tighter, and I will show that as well. So I'll show you where it was. This I actually had up here to catch a little bit more of the, I think it was actually a little bit higher. Right there is how tightly we were playing that one. We fell at the bottom trend line. We caught support down here at about $43 per AVAX. And if I move this back down to where I had it to update this thing, you can see we're still operating in a bullish channel. We have room back up to about the $45, $46 mark per AVAX, and then continuing up from there, up above these 50 period and 200 period moving averages. That's a return to bullishness, and then that opens up the gates to $48, even $52 should we continue in this channel. And as far as it goes for BTC, if BTC continues upward, that can also be good for the altcoins that are out there. Now, as per BTC and which direction it goes, let's take a look at Mara real quick. This I think is really worth mentioning because the prices have just shot off like a rocket for Mara. I think they detached themselves from Bitcoin's price. And so if you guys have the known reason for that, you're welcome to share that down in the comments. But let me just tell you, with the price increase like that we have there and the declining momentum that we have here, there is a decent likelihood with this bearish divergence that we're seeing that we do continue downward, that we're actually getting close to a short opportunity for Mara. Now, mind you, if BTC drops as well, that would amplify the effects of the short play on Mara. If BT starts to skyrocket, then that would negate the short play that you would have on Mara and could justify some of the price action that you see here. So just keep that in mind as you look at Mara, that either one of those two things could be likely. We have to keep following BTC's price action to validate what we see in Mara's price action. And when they're at odds with each other, it's a little bit strange. So I do think it's possible that we start to settle in these prices for Mara and that we could come back down. Let me see where we could peak out. 28 and then down from there, 25 I think would be a reasonable price to settle down to. That might even set up a head and shoulders for us. We're going to have to watch it. It's too early to say or just to watch and see. So we'd have possible shoulder, possible head on this thing and drop down, bounce, and then maybe down from there. Like I said, that is something that we could see. It could be an eventuality for it, but right now it's just too far away to really say about that. So let's summarize this thing. Santa rally, could it continue? Absolutely, especially in the lower volume environment. We do have to watch out because with that low volume comes low conviction. Next week's that big week's for jobs numbers, and we want to keep on seeing things, if we're going to be bullish in the markets, that keep confirming the soft landing scenario. So we want tight labor market conditions. So anything that feeds into tight labor market conditions at this point in time, given the Fed's stance, the fact that they went dovish on us is going to be a very good thing. So remember, tight GDP numbers, we want those high as well, as high as possible. And then also from there, we also want really strong numbers for declining inflation, but we do not want disinflation, just so that's out there as well. So Santa rally could continue. Next week's the week to really be cautious about things. We want to be watching those job numbers. Moving on from there, Sofi. I think Sofi could be green-lighted. Should we break $10? I think we have room for significantly more from them. And then Nvidia, man, those markets, the market bias is going to be the determining factor. If the cup and handle play works out, because the markets also helped to push it, so the market bias could be a very helpful thing, or the market bias could cancel it altogether. We could possibly see a double top and drop off that handle part of the cup and handle. So keep your eyes open. If you're in a bullish play for that one, just keep in mind you want to keep tracking those technicals the entire time, watching them, making sure that you keep yourself abreast to what exactly is happening with the markets and with Nvidia themselves. Tesla, hugely critical point. Keep on watching Tesla. We break 260. That could be very golden for us, especially if we do it on good volume and good momentum. And then moving over from there into what we see in crypto, Watch the trend lines on BTC. That's really going to tell you a lot about what could happen with the crypto market in the coming days ahead. So keep your eyes peeled. Keep on watching those things. I'm going to keep bringing them back to YouTube, so keep on coming back to this channel and check it out for updates. Guys, if you want to join me and my community members, watch what I'm buying and selling, the link for the Patreon is down in the description. Also down there's that link for Moomoo. Go ahead and grab your free stocks and 5.1% on your uninvested cash. As always, guys, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.